What's going on, guys? We're going to take a quick little look at the NASDAQ futures as they just opened up about 2 hours ago. So currently about 4:45 Pacific Standard Time. I'm starting to see a lot of people start to circulate, calls are screwed for tomorrow. Bulls are going to get wrecked. Should are people asking, should they buy puts? And a lot of this stuff coming from social media, Twitter, Reddit, so forth and so forth. Guys, that's all fun and games to kind of like look at those things and but take what you hear on especially things like Reddit or Twitter like with a grain of salt, right? Unless these people are like respected, you follow them for a while, they know what they're talking about. Here's the thing when it comes to looking at the futures, right? As soon as the futures open up and they open up red, everyone thinks that, oh, tomorrow's going to be a crazy day, right? There's still a lot of people that newer traders that really didn't know what they were doing in 2020, made a lot of money in 2021. And then, to start 2022 had a very tough time. So it's like, they don't really have a good idea of what to distinguish between going long, going short. They're always going against trend. When it hits, they look like a hero. When it doesn't, it's because of market makers or something, right? All that stuff is foolish, guys. It's absolutely foolish. So, speaking from a more realistic trader, taking a realistic approach to this market, guys, futures opening up red is not necessarily a bad thing. If anything, you would like the futures to open up red into the overnight session, into the pre-market session, because you want it to backtest the support, especially if we're coming off a 3-day run-up, right? We've got support below. So if we're looking at the NASDAQ 100 right now, we are actually resting on, the 100 simple moving average. Now, if we do break below that, no harm, no foul, no structure damage has been done. We are going to pull into the 100 EMA. Great. If we do decide to pull back lower, we've got the 5-day moving average, guys. 5-day moving average is sitting at a price of around 12,720. Okay, let's say it decides to pull back a little bit more. So we've got more support here at the 10-day moving average at 12,567. Guys, the NASDAQ 100 would need to lose 12,000 before we go back to thinking, new lows. Before we go back to thinking, oh my God, the bulls got wrecked. The bulls got wrecked. Everyone who bought calls over the weekend or holding calls over the weekend, you guys are wrecked. Guys, especially if you're holding calls over the weekend, relax, right? Even if we open up a little bit red, look to these lower levels of support here, see which one catches. If you want a dollar cost average in, bring that option price down a little bit, your share price down a little bit. You can play the bounce, right? There's a lot of ways that you can play it. Here's what I like to tell people. Anytime we open up flat or red, right? Now, I don't mean gapping down 450 points on the NASDAQ, but I mean, down 50, down 100, down 120. That's fine. Give the bulls the benefit of the doubt to trap shorts off the open. If they can trap shorts off the open, stocks will go from red to green. Shorts will be forced to cover and get out of that. Now, when I say shorts are forced to cover, I'm not talking about it from like a GameStop, AMC type of, short squeeze talk, okay? I'm talking about, real day traders trading, right? Short-term intraday scalpers. They're going to have to cover their positions. They'll make a little bit of money on the way down. As soon as it catches support, starts taking out some of those previous hours highs, they're going to have to cover those short positions. That way you don't, get your face ripped off. And then it'll allow stocks more room to breathe to go back to the upside. If stocks are strong, they're going to take out that $13,000 area. And then the next area of support is going to be that 13,194. So again, be careful who you're listening to on social media, especially Reddit. Sometimes I like to go on Reddit just to kind of see what some of these retail traders are talking about. And sometimes when I'm just reading through, I have a hard time reading through a lot of this, nonsense that gets spewed around. A lot of that stuff is just, pure speculation, pure gambling, pure, market's been on a 2-week run, short it here. Market goes down a little bit, then it's like they look like, a rock star because they call the top. Guys, if you're interested in calling tops and calling the bottoms on things, you're in the wrong business. Like this is not a business to try to call the bottom or call the top. What you're looking for is structure. You're looking for price action. You're looking at the supply and demand. And all you're looking to do is get a little piece of that along the way. I hope that helps, guys. Just keep in mind, yes, futures are down 50 points right now. That's not necessarily a bad thing. Futures gap down, 900 points. Yeah, now we're talking about jumping out of the 20th story on the biggest building on Wall Street. But, you know, if we're not gapping down 400, 500, 600 points, guys, you know, it's okay. Okay. It's okay.